Well, the bank's key interest rate is now 2.5%, and Governor Tiff Macklem, who you just heard from, says the size of today's hike reflects the extraordinary economic circumstances, with inflation at its highest level in nearly 40 years. Kelly Botello spoke with an economist and housing expert to break down what this hike means for the average Canadian.
Simply put, the Bank of Canada's 1% interest rate hike means it's going to cost more to borrow money. It will also force many people to spend less and to borrow less. And that's the whole point.
For lots of reasons, people are spending a lot more than the economy can provide. So in order to get individuals and businesses, but to get the average person to spend less, the Bank of Canada raises interest rates.
U of T professor and economist Waleed Hijazi says the only way to curb the skyrocketing inflation Canadians are experiencing is through big interest rate hikes, like the one announced today.
Is to shock the economy with higher interest rates. And so when interest rates are raised a lot, what that typically does is it gets people to correct their spending, to reduce spending extensively, for housing prices to slow, perhaps come down a bit, and that typically results in a slowdown.
So curbing inflation is good, but the interest rate hike will negatively impact many. It means people with variable mortgages will pay more in interest and will likely have higher monthly mortgage payments. It also means that for some, home ownership just became even more unattainable.
We have seen that the rise in interest rates has put a bit of a damper on the sales activity. So less people are out there buying homes currently. A lot of that is the sort of wait and see effect. They're looking to see where interest rates settle out and what impact that has on prices.
People heading to the bank today say this interest rate hike is certainly going to impact how they spend and borrow money.
Way too expensive, way too expensive.
That's way too much, and I'm glad we already got a mortgage back in February and got locked in at 2.34.
So are you happy you locked it in?
Yes, I am. Yeah.
Well, we just made a family acquisition in the States, and that's going to raise interest rates by quite a bit.
An extra $250 a month?
Yeah, I think so.
Yeah. Hijazi says this was the right move by the Bank of Canada.
The one thing that we know is inflation is bad for an economy in so many ways.
Adding that Canada will likely be in a recession by the end of this year. Kelly Botello, CHCH News.